Milind, good morning. Thank you for joining us. We are going through an interesting phase in the FMCG sector. One side is volume growth, which is not bad, pretty impressive actually. And on the other side are raw material pressures. Where do you think the bend is going to be now? Will volume growth collapse because of what is happening on the pricing front, or do you think they both will sustain, where volume growth will remain high and margins will also remain under pressure?
Good morning. Thanks for having me on the show. I think it is not likely logically that both volume growth and margin growth will sustain. One of them will have to give way to the other. And if you observe FMCG companies over the past, say, 2 decades, you will always find that this growth margin axis always keeps playing out. And I can see that companies are sacrificing margins for growth in the current scenario. There are several reasons for that. But I feel that once you discount the post-COVID upsurge in consumption, you will have to find ways of sustaining the volume growth. And towards that, I feel pricing by consumer companies may be more benign. There may be more trade push given by companies just to sustain the volumes. I think inflation is a serious concern. But at the same time, the COVID period has also given FMCG companies a strong base through several cost-cutting measures they would have taken. And also, I feel the rationalization of the advertising and sales promotion expenditure may have given them quite a few dips to play with in the margin space. So overall, I feel that companies will let margins yield to growth, and the phenomenon of both growing is not likely to sustain.
Manoj, the story so far for consumer staples has been volume growth is decent, and till Q3 they were also able to, in a sense, manage volume growth. Like Mr. Sarwate said, do you think Q4 onwards the situation will change?
Hi, good morning. Just a couple of points to highlight there. Q4 onwards, yes, the situation will change optically because particularly FMCG had a good, first half last calendar. So to that extent, yes, optically. But then the important point to note here is in times like these, it's extremely critical to look at TTM, trailing 12 months numbers or moving averages to get a trajectory. Now, when I look at the trajectory, I'm extremely confident, given the understanding what we have, network checks and conversations with, particularly unlisted companies, the trends, what they're seeing, etc. And also what the listed companies as a basket has reported, there seems to be a very clear trend of formalization accelerating, or put it differently, market share gains. Now, this is something, not necessarily Nielsen is picking up currently because of the challenges in data collection at this point. Just to summary to what I'm just trying to say is that, yes, the trajectory, is likely getting better going into, next year. Optically, it can even look up, good for some companies, but for some may not be, depending on the base last year. So that's point.
Mr. Sarwate, Asian Paints is growing, Dabur is growing, Imami is growing, and Jubilant Pizza is also growing. Where do you think the post-COVID normalization will be the highest? We are looking at Prism, we are looking at the numbers which include a bit of a revenge shopping or revenge consumption because of COVID. But when things will normalize in 2021, where do you think the laggards will emerge and where do you think the winners will emerge?
I feel that the laggards will emerge on the lower parts of the Maslow's hierarchy on basic needs. During COVID, food and safety products, they took a real big boost because of the situation then prevailing. It is very natural that the growth in these areas will peter out. People will go back to discretionary consumption, and I think those growths will continue. I feel that when it comes to this revenge consumption, we have to also keep in mind that unlike a simplistic model of COVID coming and going, we may have successive peaks of COVID waves, and situation will continue to be uncertain. So really speaking, the revenge consumption may or may not play out in one burst, as they say. It may have its ups and downs. Secondly, I feel the whole the discussion that we are having may be missing out the side of consumer income. I feel a lot depends when it comes to volume growth. A lot depends on not only the current levels of consumer income, but also it's spread across demographics, and most importantly, the expectations about future income. I feel the successive waves of COVID are also bringing in some higher degree of uncertainty about whether I will continue to get the same level of income next year. So I feel that there is still some uncertainty about how the future growth will pan out. But it is very clear that foods will plateau out. Other things such as safety and hygiene, which received such a big trigger during COVID, will definitely peter out. Companies like Marico, for example, have already announced that they may even discontinue the hygiene portfolio that they had built. And a lot of new players had jumped into this space. I think that will certainly peter out. In terms of long-term consumption, may not be FMCG, but other larger consumption items like durables, etc., they may come back to some extent, but not because, as I said, future incomes are still uncertain.
Okay. Manoj, if you talk about companies and the way they've been innovating at this time, I mean, we've seen smaller packaging, we've seen a move towards staples when demand was there. But now going forward, where do you see the growth? What are some of the trends that you see emerging as competition heats up?
Okay, so two points to add here. Just taking from what Milind just commented about the consumption, how does the pie would look like going into next year? I'm also in the camp and completely agree with Milind that it is likely to be discretionary as a basket in consumption, outperforming the consumer staples. And there's one important point which I just want to highlight that yes, on a lower base in FY21, we are in general consensus is looking at let's say real GDP growth in double digits, right? I mean, so from a consumer income point of view, it can be extremely a potent combination, for discretionary consumption because there are going to be a lot of surplus income, let's say, going into next year. So that's one. The second aspect, from a trend point of view, what we are seeing, in fact, what we have seen in the last 6 months, particularly, is that the Indian, consumer staple companies have actually been very agile, particularly when it comes to innovation. So whether it's a Dabur, a Marico, Godrej Consumer, or even a Jyoti Labs, versus the basket of Unilever or a Nestle or even a Procter & Gamble, they have not really done much incrementally relative to the Indian basket. And I think one of the reasons actually has been that, obviously Indian companies are based in India, so your agility, is a little faster in this case. Whereas in most of the MNCs, particularly the R&D part, is a little more than one country decision. Having said that, when I look at next year, the innovation what companies have done, with the Indian companies, I think will keep them in good stead. Just give you one number here. 9 months FY21, 6% of Dabur's revenue actually has come from new products. Marico has added 2 to 3% of their last 9 months revenue, if not more, again from new products. And the trajectory, looks promising for both. So that's one trend. The second, is that 6 months back, there was a lot of comment about what Jio will do and what is the retail consolidation. I think it is still happening in the background, and that's something which most companies will watch very carefully. Point number 3, as modern retail makes a comeback, let's say when consumers starts going to a DMart, or a Big Bazaar, more than what they have done in the last 6-9 months, it is linked to that innovation point. The innovation intensity will likely get better. Point number 4, you look at the recovering real estate, the general optimism, which I find in paints and building material space and even durables, is something which will continue. And lastly speaking, this is specific to one industry, which is jewelry. A lot of postponed weddings of last year essentially, appears good news for jewelry industry in general, looking at the next 12 months.
Okay. Interesting. So some of the trends to watch out there as well. In terms of challenges going forward, Milind, whether it be to do with spending, whether it be in terms of input costs and margins, where do you feel the headwinds will continue to come from?
Inflation is a major headwind, and while at the macro level, there is a huge surge in inflation world over. The Bloomberg Commodity Index, for example, has gone up 67% as compared to 2020 low. And more importantly, this is only the fourth occasion in the past 100 years when worldwide commodity inflation is so high. So I think consumer companies will face that headwind very strongly. Commodities form anywhere between 30 to 60, 65% of the revenue for all FMCG companies. So they will have to manage commodity costs much better. And as you know, commodity cycles play differently for different companies. So it's not one size fit all. The other headwind I see is the crude oil prices, which go up. Now, FMCG companies are not directly dependent on crude oil, but they do a lot of plastic packaging. Maybe it forms anywhere between 8 to 13% of their revenue. So that crude oil affecting the plastic pricing and that raw material, packaging material impact is also something which is significant. In terms of overheads, there may be a general inflation in the country. That is not such a big factor. On the flip side, on the positive flip side, as I mentioned, companies have saved a lot of costs at the structural level during COVID. They have also realized that not all of their advertising and sales promotion is worth the money that they spend, and therefore there is a rationalization over there. So I think these are the headwinds and tailwinds which FMCG companies will face. At the sectoral level, I also see another phenomenon playing out, which is that the sector will recover in a K recovery format. The better players in the industry will gain more, and the relatively not so nimble and not so agile players, as Manoj also mentioned rightly, I think they will keep suffering. So you will have a phenomenon where some players do extremely well and some players do really not so well. The other worry which companies should look at, FMCG companies should look at, is that this K phenomenon will work out also as regards consumers. I personally feel that a pandemic, a crisis like this always makes the rich more rich and poor more poor. And therefore, the classical middle income group may have an upheaval, and companies may have to think of having on one side more discretionary products at the higher end of the spectrum, at the same time have more value for money products for the lower end of the spectrum. So there are interesting times, but challenges ahead, but it looks good for FMCG companies looking at our demographics and the income levels.
Okay, on that positive note, Milind as well as Manoj, both of you, thanks as always for taking the time out and speaking with us today.